Hello. Good morning, everyone. Good morning, and depending on what time zone you're tuning in from, good afternoon and good evening to you. As always, I'm very excited to welcome you to another promising edition of our Forex Morning Mastery as we, of course, head into the second half of the week. So today is Wednesday, it's the midweek, and this is where we pause, breathe, and of course, realign ourselves with the scope we have identified at the beginning of the week. And we're also going to be looking into how well the assets we have been monitoring has been doing. Well, personally, for me, I've not done pretty well this week. Um, Monday trading session didn't really give me that significant move I was expecting. And I don't trade on Tuesdays. This time around, we noticed that Tuesday was when price really moved and decided to get into a particular direction. So I missed out on most of the trades we planned at the beginning of the week. And if you in any way were able to capture those moves, well, I must say, well done and kudos to you. So today we are going to be not just looking at the charts, but understanding the current psychology in the market. We all know that the middle of the week is powerful because it reveals who's trading from clarity and who's trading from noise. Today we will decode that line together across the asset we're monitoring. Remember, we have been monitoring the USDJPY, the GBPUSD, XAUUSD, and of course the US crude oil. And before we go further, if you're new here, welcome to the family. This is where we blend deep market insight with emotional mastery. My own name is Sheriff Daramola, and we usually run this Forex Morning Mastery 3 times in a week: Mondays, Wednesdays, and of course Friday, where we where I walk you through the key assets that I monitor on a weekly basis. So this time around, we are looking at the US oil, the GBP USD, USDJPY, and the gold commodity. Not just to forecast moves, but to train our mind to stay centered, understand the psychology in the market, mark out key levels, and of course, use those structures to navigate the market going forward. And of course, the week so far has been quite interesting. Since the week began, we have seen some interesting build up across the market. The US oil is currently under serious pressure by rising inventories from the API report we got yesterday, and the pound is also steady but a little bit cautious after a very strong move to the downside on Monday. And the yen as well is showing some sign of resilience as risk of sentiment grows. And of course, the gold commodity is still holding strong as uncertainty reigns. So it's if you look at the market so far, which I'm going to be expatiating on later in the session, you would have noticed that there is more of hesitation and indecision going on in the market, and this is where psychology and understanding the market becomes the real edge we want to be banking on. So, to get into the business, the first thing we normally do is to quickly have a deep understanding of the DXY, the US dollar market index, to give ourselves a deeper understanding of how the US dollars, the sentiment in the US dollar is rippling across the major asset. Now, what you see on my chart right now is the DXY, and this is the 4 hours time frame, and the structure we mapped out I think last week or a couple of weeks ago still remains intact, where price continues to respect that ascending trend line we spotted, as you will see here. And of course, when price remains above the ascending trend line, we continue to look out for patterns and structures that support buying ideas. Now, zooming into the structure, this was what we were looking at. So we saw price broke out of a significant structure last week. Is it last? Yes, last week we saw price broke out of the $98.50 level, a level which had been a strong resistance line throughout the month of October. And as at the time this new week began, we noticed that there was a resistant line here at the $99.85 level as buyers found it difficult to break through this level going into the end of last week trading session. And if you remember what I said here on Monday, that we will be looking to buy the US dollar if price can break out, retest the resistant line to the upside, or we look out for selling ideas if buyers find it difficult to break through, maybe pushing price into the 98.50 or the ascending trend line. And of course, it is quite obvious, as you will see here, price did broke out of the resistant line, and of course we saw a couple of retests, giving us more opportunities to capitalize on that uptrend move. And look at what happened here yesterday morning, a bullish engulfing candle springing out of that particular area to emphasize the strength of the buyers at this point in time. So since the week began, the price of the US dollar has increased significantly from where it was at the end of last week. And this significant move is largely driven by renewed safe haven demand as global risk sentiment continues to rise. Of course, rise from fears of overvalued AI stocks to growing geopolitical tensions, and of course, the prolonged US government shutdown that's rattling investors' confidence at this particular point in time. Now, on top of that, traders are also scaling back their bets on another Fed rate cut in December after the Fed chairman's cautious tone during the FOMC press conference last week, where he signaled a wait and see approach. Now, heading into today and of course the second half of the week, the spotlight is strongly on the US labor data. We have the ISM services PMI. We have the ADP employment change, which is coming up by 1:15 p.m. UTC today. That's exactly 2:15 p.m. local time for those of us who are watching or monitoring from Nigeria. And then we also have the ISM services PMI, which is coming up by 3 p.m. UTC. That's 4 p.m. local time. So I think that's all we are looking forward to today. Now, it is expected that stronger than expected numbers could reinforce the Fed's hesitancy to ease further, giving the dollar more fuel to continue the uptrend scenario. But if the data disappoints, we could see a short-term pullback, maybe back into the structure that was broken at the beginning of the week as market price in renewed policy uncertainty. So from a fundamental perspective and taking that into the chart, I can say overall the dollar strength, the strength we see on the charts is a reflection of global caution and fading rate cut expectation. A reminder that right now capital is flowing into safety, not speculation. And speaking of speculation, well, let's shift our focus to the key assets we are tracking this week, and let's see how each one is responding to this dominant US dollar narrative. Now, to start the analysis for today, we will be jumping right into the US crude oil market. Okay. Now, in the US crude oil market, we've seen the market do a little bit of choppiness through the course of the week. Price rose a bit at the start of the week, then we began to see a decline yesterday following that what's it called again? The US crude oil inventory, which jumped by 6.5 million barrels last week, signaling weaker demand. Now, for those of us who are joining for the first time, we will not really understand the dynamics behind the EIA or API reports. Now, if stockpile report rises significantly, like what we saw yesterday, that's a 6.5 million barrels, it tells us that the demand in the market wasn't strong enough to meet the supply. So as a result of that, they were able to save more fuel. And if you can save more fuel, that means that supply is more than demand. And from our simple economics, that means that um, the price of that commodity will drop because of the surplusness, if there is a word like that, in the market, right? And as a result, we saw price break down that range we identified at the beginning of the week. So this was where we were at the beginning of the week. Price was more or less consolidating. In fact, I had my buy position triggered at some point. I got stopped out in the loss. I had my sell position also triggered, and at a point I moved my stop losses. Then I got taken out of that one as well. So for this week, have not really made anything in this market. And immediately after the AP high, we saw price maintain selling pressure and continue to trade below the $60 69 cent level. Now, one thing that caught my attention here is that despite that strong bearish move we saw yesterday after the AP high, we saw that the demand here at that psychological level at the $60 area negated sellers pressure. And if you remember, this was our demand zone prior to the beginning of the week. Now, I want to think that the Ukraine attacks on Russian refineries are keeping the downside limited as supply risk lingers. So I want to expect choppy price action driven by data and geopolitics today. And as if we look at things from a technical standpoint, at this juncture, I will still continue to hold a bullish bias. Why? Price is still above my key level at the $60 area, and price sellers are still finding it difficult to break down this demand zone we identified between the $59.50 level and the $60 area. Now, for me, as you will see at the bottom of your screen, I already have a buy position running on the USDJPY, and the structure that I used to guide that decision is right here on the 15 minutes time frame. Now, what I did here on the 15 minutes time frame is quite simple. So what I did was to take into account the character of price action in the last 24 hours. Now, this is the key level here, the $60 mark, right? So it's still very much intact. Price still remains above it, as you will see here. And look at what has happened in the last 24 hours. The market has been range bound, price confined within the $60.50 level and the $59.78 area to emphasize the prevailing uncertainty going on in this market here. And another thing is that price is trading below this descending trend line, which shows that sellers may likely be still in charge of this market. So as a result of this, I was looking to buy the breakout of the $60.50 level, which actually triggered my buy position this morning that you can see at the bottom of your screen. Now, with the way situation is going right now, it will be reasonable to consider buying as long as price remains above the $60 $60.50 level. So if you want to be part of this opportunity with me, placing a buy above the $60.50 level is still looking very reasonable at this point, with stop losses right below the previous low here with about 30 pips in that regard. Okay, so I do have my stop loss. Let me place my stop loss right now below the $60.20 level. I will just do that right away, and hopefully the market will continue in that direction, which of course will be market leaning towards the Ukraine attacks on Russian refineries. Now, if sellers, that is, if market continues to remain dovish, especially market leaning towards the 6.5 million barrels stock report we saw last week, we could see a bearish move. And for me to sell at this point, I'm yet to see any convincing structure here, though it's reasonable to look out for selling ideas below the descending trend line. But one thing I notice here is that there has been more of a hammer candle around this area. So if you look at the last 1, 2, 3, 4, the last 2 hours, you will see the nature of this candle shows that we have multiple hammer candles. And what does hammer candle tells us? It tells us that buyers are still present in this market. And for me, it would not make any sense to sell when we see hammer candles all over the place. So if I want to consider selling right from this juncture, I would rather want to see price take out the $60.25 level right here. Let me mark out that level, $60.25 level, right? So I would like to see price break down that particular structure, and not only break it down, I want to see the market do a retest of that structure to confirm that sellers are now taking over the market. So if a breakdown of that structure happens and price moves, we'll look at moving stop losses to secure some sell position as soon as price gets close to the $60 area, where we look forward to see if the market will break it down to the downside or find buy pressure above it. Then we'll decide what next to do. So at this moment, I still remain bullish, right? Two reasons behind that. I'm looking at a breakout of the trend line to join an uptrend scenario on the US all spot. And secondly, I have noticed multiple hammer candles around here, which shows that buyers are still present in this market. So as a result of this, I hold on to a bullish bias, at least in the meantime. So that is my simple view into the US crude oil for today and tomorrow's trading session. I do hope that I made myself very clear, but if you need some clarifications or you want to ask any question, feel free to let me know in the comment section. So I'll take 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So let's move on to the next one. So like I said, I have a buy position running already. Hopefully the market breaks out of the descending trend line and continues to rise. And I went on to say that I will not consider selling except the $60.25 level is broken, not only broken, retested before I can jump into a sell. So I wish us all the best of luck on the US crude oil. So moving on to the next asset on my watch list. So the next asset we are looking at this morning is the GBP USD, the pound sterling against the US dollar. And this was the structure we mapped out on the 4 hours time frame. This is the 4 hours time frame at the beginning of the week. And this descending trend line, we have a couple of them here, captured the character of price action since mid September. So we are looking at about 6 to 7 weeks of historical data showing us how the dollar has gained momentum within this specific time frame. I personally missed out on the bearish move from this for this week. Let me remind you of what we saw around the end of this descending trend line. So at the beginning of the week, we captured a range, right, where the key level at the 1.315 was the resistance line, and then we had the support at the 1.3100 level, right? And I did went on to confirm the level of uncertainty that gripped the market during the first 10 to 12 hours of the week as price remained confined within a range bound. And of course, you know how we use our range bound structure. We wait for price to either break out the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And look at what happened. I had a buy position triggered. We did not do very well at all. I got stopped out in a loss on that buy. And then I had a sell position triggered about a couple of hours into the New York session on Monday. And of course, that one also went into a loss. So I recorded two losses on the GBP USD on Monday. And as you will see, the real movement in price action did not happen until yesterday's Tuesday's trading session, which obviously you know I don't trade on Tuesdays, so I missed out on this bearish move that you see here. Now, if you are taking it and you have captured that move, well done, kudos to you. If you still have the position running, you currently be with a minimum of 85 pips running in profit right now. Well done for capturing that move if you are in that trade. Now, it is high time you want to be moving your stop losses to secure some profits at this juncture if you are yet to do so. Now, I would advise securing your position with about 20 pips if you are running with about that 85 pips to give enough breathing space for price action to move around. And with my experience in the GBP USD market, running with about 85 pips doesn't really say that you are in profit. So you need to be very, very patient. So let's give enough breathing space for price action to move around. So if you're running with about 80 pips in profit, secure about 20 pips as we are looking at the market from a long-term perspective. Remember 2 weeks ago, is it 2 weeks ago or last week, we held onto the GBP throughout the week, and with that mentality, we were able to secure over 100 pips on two positions 2 weeks ago. And the same thing is also happening right now. So if you would ask me, move your stop losses right now. Hold on a sec. Let me extend this trend line as it's going to be playing some significant role today. Now, look at this trend line here. Price did break down the trend line yesterday, and price remains below it. And we may likely see price move back into structure, retest it to continue the downtrend move. So if you want to be moving your stop losses at this juncture, move it right above the trend line, and that will be about 35 pips securing the current sell position, which is not bad anyway. So if price really goes against us and take us out of that position, at least we will have something to hold on to. So move your stop losses right now, secure some profit. Now, for those who are doing short-term trading, like scalping or day trading, you might be thinking of capturing between here and this trend line, which is about 40 pips um, in that regard. Now, for me, I will say that even though the pound is looking very, very weak, with in recent time, if you see the last 24 hours, there has been a sense of softness in the US dollar, which obviously had created a support line on the GBP USD at around the 1.30100 area, supporting the pound sterling maybe in the meantime, as you will see here, as market looks forward to the upcoming UK tax hike. I don't think if it is here. Oh, okay. Bank of England interest rate decision is coming up tomorrow. That's true. So we're looking forward to see that, and I guess the market is beginning to anticipate that. So those who had sold at the beginning of the week are doing some profit taking right now, waiting for the data from the UK to happen, and of course the today's US ISM services PMI, and of course, which one again? I think it's the ADP, right? Yes, ADP employment change, which could push the price lower if the dollar strength return. But the overall bias still remains slightly bearish ahead of today and tomorrow's economic events. And to help me navigate this market, we have a simple trading setup on the 15 minutes time frame, as you will see here. So look at the structure I was able to come up with on the 15 minutes time frame. So what I did here was to capture what has been going on in the last 12 hours. Unfortunately, I missed out on this buy position that we have here. I missed out on that one. So the market has been consolidating for about 12 hours. Be proud to the breakout of the structure. And one thing you will see, price has moved about how many pips now? About 17 pips in that direction. So if you are a short-term trader or a day trader looking to capture any move from this particular point, I want to say you've missed out on it. All you just want to be doing right now is exercise patience, and let's see if the market will come back, retest the structure where the emergence of buy pressure could give an opportunity to capture that 40, 50 moves that will move right into the descending trend line we talked about earlier. So let's see how that is going to play out going forward. But if price drops further and then breaks down the support line here at the 1.30135, then we'll have no other choice than to maintain the bearish bias we've been holding since the beginning of the week. All right. So let's see how this is going to be playing out going forward. I wish us all the best of luck on the GBP USD. If you have questions, let me know. I'll take 5-10 seconds off, and then we'll be right back in a moment. Okay, so I guess we are good to go. We shall be moving into the Next asset on our watch list. Let's remain patient here. Short-term traders, if you are looking to buy, you want to see price come back, retest structure, or look out for, if price does not come back to retest the structure, look out for reversal setups like double bottom structures, inverse head and shoulder patterns, and then buy the breakout of the neckline. So I wish us all the best of luck on the GBP USD. So moving on to the next asset on our watch list. So the next one I'm looking at this morning is the USDJPY, US dollar against the Japanese yen. And what an interesting situation we have on this market. So we saw the yen strengthen during the first half of the week as price dropped significantly back into a significant structure we marked at the 153.00 area. Just a fresh reminder, remember this was the structure we marked out at the beginning of the week. We had a beautiful ascending trend line as you see here, and you know what we do when price remains above the ascending trend line. We look out for patterns and structures that support buying ideas. Now, for me, again, on the USDJPY, I wasn't able to capture these moves. Remember, at the beginning of the week, we had this flag, potential flag pattern, let me put it that way, because it never materialized. And in fact, I was strongly thinking that the momentum will continue breaking out the 154.300 to continue the uptrend move. But unfortunately, that trade got closed out in a loss as well. And then we saw price drop all the way down into the key level at the 153.00 area. And of course, this whole drop is not coming to us as a surprise. Remember, we talked about this, that there is a likelihood that this whole formation here could either become an uptrend continuation setup or a reversal setup. And for those who are looking for short-term trading opportunities, that we could look out for price coming back to retest the 153.00 level, a level which was a resistant line throughout the month of October, as we saw buyers were finding it difficult to break through, and finally it got broken on the last trading day of the month of October. And there is a theoretical understanding that when price breaks out of a key structure like this, there is a high chance that price will come back, retest the structure in an attempt to continue the uptrend move. And look at how beautifully that confluence here is with this ascending trend line. And immediately price tested that confluence, we saw bullish buy pressure resume all over again. And this, of course, for me, supports the long-term bullish perspective in this particular market. So, in as much as the yen gained momentum here, as global risk of sentiment boosted its demand, and of course, we also had Japan's officials warn against sharp currency moves. And you know, this kind of thing happens prior to any form of Bank of Japan's intervention. It happened last year, towards the end of last year. It also happened 2 years ago. So the market was a little bit wary of the possibility that this could happen. And as a result, we saw some profit taking activity push price back into this particular structure. So the question now going into today's trading session is whether this bearish move has ended and or it will continue, and that will only be confirmed if the descending trend line and the 153 level gets broken to the downside, or will this area become a platform that will incite the next leg of bullish momentum. Now, with the ongoing US government shutdown and falling tech stocks, which also had some little bit of risk aversion into the market. Um, and of course, the potential intervention from the Japanese economic docket. And in fact, there are a lot of factors here. And of course, the uncertainty over the Fed's next move. It keeps the US dollar, USDJPY, a little bit volatile. And we may likely see some very, very strong move from this area as market anticipates the events coming up today. So we can see there's been a little bit of choppiness here. And whatever happens today will determine where we are going. So we expect continued downside pressure in the meantime, unless US yield rebound or we see some positive reports from the ADP and the ISM services PMI later today. And to help me navigate this market today, we have a simple structure, which of course will benefit day traders as well. So what I was able to do here on the 15 minutes time frame is to mark out a range, as you will see here. The last 24 hours have shown that price still remains confined, consolidating between the 153.700 and the 152.950, as you will see here. Now, if you are willing to join a bullish move from here, that is for those of you who are here to capture this move, definitely you want to be looking at a breakout of the resistance line at the 153.7 to join that move. Now, let me mark out a structure which I left out here. I think we have a demand around the 153.400 area, 153.400 level. I will share with you why that is. Hold on a second. Let me just mark this out correctly. So we have the 153.4 and go to as far back as yesterday morning. You can see how that level had been a demand zone, right? See what happened here yesterday morning. During the UK session, it was more of sellers finding it difficult to break through, though we had a breakdown here during the Asian session as Asian traders bought more yen. But as you will see, they sold it back again to just make some profit, and since then price is using the 153.4 as a platform that could be pushing price higher again. So at this juncture, looking to buy at the break of the 153.700. So let me just put that right there. Break of that area we buy. And then if we see price break down, retest the 153.400 level, then we can start considering selling. So I will sell only at the breakdown. Then maybe I'll scale down to the 5 minutes time frame to see a retest of structure. So you can capture this short-term move back into support. That's about 45 pips, as you will see. And if price goes ahead to break down the support here at the 152.950, confirmation that a retest of structure will definitely welcome more selling ideas. But with the way things are going right now, the chances that price will continue the uptrend is very much intact as we continue to see buy pressure right around the 153.400 level. So we will not consider selling unless this level is broken and retested. So that's my simple structure guiding my trading decisions today. It simply tells me, gives me an hint, or let me say, reflects the current sentiment in the market right now. So let's see what happens while we await the ADP employment happening in about 4 to 5 hours from now, and then the ISM services PMI coming up in about 6 hours from now. So I want to wish us all the best of luck on the USD JPY. So if you have any question whatsoever, feel free to let me know in the comment section. I'll take another 5-10 seconds off um, to see if there are any questions before we um, we come back to take on the last asset on our watch list. Stay tuned. Okay, everyone. So let's move on to the final asset on our watch list. So the final asset, my favorite amongst them, that is the XAUUSD, popularly known as the gold spot. And we are at a critical juncture in this market right now as price continues to consolidate just right above this ascending trend line we spotted at the beginning of the week, emphasizing the prevailing uncertainty going on in the market. Now, if we take a zoom into the current structure, you will see that price still remains and continues to over around the trend line, and of course our key level at the 3,950 level, further emphasizing the indecision going on in the market. And in fact, we are at a critical juncture right now where, depending on what happens here, will determine the next line of action. So at this point, investors, based on what is going on, may want to continue to seek safety amidst the prolonged US government shutdown and geopolitical tension. Now, the bullish momentum is also capped as long as the dollar remains strong. And of course, the idea of fading hopes for more Fed rate cuts also limits buying around the gold commodity. So traders will be looking forward to the US job data, like the ADP employment we are waiting for today, if it happens. We also have the NFP report coming in on Friday, and of course the average hourly earning. And then today also we have the ISM services PMI for fresh cues on Fed policy direction. So I want to expect gold to stay strong, but range bound unless US data surprises us sharply. And the fact that price still remains above our key level at the 3,950 also makes me feel confident in the gold market at this point. So if price can break down the 3,950, then that will likely be inciting a crash or profit taking around the gold commodity. Now, to navigate today's session, let's run through the 15 minutes time frame where my setup is. So on the 15 minutes time frame, you can see the market is more range bound, as you will see here. And my goodness, I forgot to move my stop loss to break even on the gold. Gold had already moved in profit for me. Oh my goodness. So, okay, it happens. It had moved from profit for me before, but I was looking to move my stop loss when we analyzed the market, but see what happened. So, all right, it's okay. So as you can see right now, the market is range bound at the moment, as you see. Market is range bound, confined within the 3,972 and the 3,929 in the last 15 hours thereabout. And I also saw a breakout of this trend line this morning, which appears to be a false breakout right now. As you will see, price is back into the structure. So I want to think this could be price coming back to retest the structure in an attempt to continue the uptrend move. Okay, so That is one scenario I'm looking at here. And if you are yet to join the trade, you could have your buy stop order above the 3,972 to capture that move if a retest of structure is established, right? And then look to add more buy position at the break of the 3,987 400 500, let me put it that way, 500. Okay, all right. So if price goes ahead to break out retest, then we had more buy position. Now the only condition that will make me sell, like I did say earlier, that due to this recent strength in the US dollar, the market may continue to um, favor the dollar as gold become very expensive for other currency holders to buy. So what I'm looking at to sell now is if price can break down, retest the support line that has been holding since the late hours of the Asian session. So if price can break down, retest the 3,962, then we look to sell the gold commodity. And interestingly, it also backs up with this descending trend line we have here. As you all know, if price remains below the descending trend line, we look out for selling ideas. And we do not want to be too ambitious with the sell. So TP target will be anywhere close to the support line if we are selling the goal. So I'll just place my TP around the 3,937 in the meantime, and let's see how that is going to play out. And if price goes ahead to break down, retest that support line, then we could start considering adding another sell to the existing one. So at this point in time, let's see how the market is going to play out from the structure. So like I said, looking to add a buy position at the break of the 3,972 as this will establish a breakdown retest scenario. But if price goes ahead to break down the 3,962, then we look to join a sell from that particular level. So it's a simple setup we have here. A new range bound structure is established, and let's see how the market is going to play out around this area. And if anything new happens, maybe along the way, and maybe something I did not talk about during the session, I will update us accordingly on my Telegram platform. So that is my simple view on the XAUUSD for today. I do hope I made myself very clear. I will wait for about 10, 5 seconds. Let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. All right. So, in the absence of no questions, I want to assume that we are all on the same page, right? No questions, no clarifications needed. So, we are good to go, isn't it? And it's on this note we have come to the end of today's session. And please always remember the goal isn't just to catch the pips or catch the money, it's to build consistency through awareness. So as we move into the next 2 trading days, please protect your profits as soon as price moves in your favor. Manage your exposures wisely and let the market come to you. So that's why we've marked out key structures that we are going to be using to navigate the market today and tomorrow. let's abide with it and let it dictate our next line of action. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from the course of this session. If you did, why not join us in our next edition? And of course, click on the subscribe button, click on the like button, and continue to support the project. So I look forward to seeing you again on Friday when we will be reviewing how this asset performed and prepare for the final push of the week. Until then, trade smart, trade consciously, and do have a wonderful and beautiful evening. Bye bye.